Our fifth presenter of the day is Mark Savage, Chief Executive Officer of Agrimin. Over to you, Mark.
All right, thanks very much. Appreciate everybody who's tuned in today for Agrimin's presentation. It's been pretty busy few months since the last Noosa virtual presentation we gave in July. We've put out the DFS, which was outstanding. Had some really solid results, and we're now sort of flat out going through offtake and funding and wrapping up our final approval. So I'll run you through all of that today. I'll just bring up my presentation and share the screen. Yeah, so today we're capped at about $120 million. We've got $3.2 million in the bank, and we should get another R&D refund later this year. So we're pretty well funded to continue going through what is now a pretty low cash burn period for the company on the back of the DFS being complete. We've got Aussie Super still as our largest shareholder. Board and management still have good skin in the game. And you can see there the share price has been pretty stable for the last 6 months. We did have the dip like most companies earlier this year, but you know, our projects in WA, it's been very much business as usual for us throughout the course of this year. And you can see here on this map, so Lake Mackay is Western Australia's largest salt lake. We've applied for mining tenements over the lake back in middle of 2014. Since then, we've completed a range of studies, so we've been quite methodical. We've been through the scoping study, PFS, DFS phases over the last 6 years. We've invested over $40 million into the project since acquiring the tenements. And you know, I guess most importantly, on the back of the DFS, we can confirm that we have the lowest cost, longest life, largest and most scalable SOP asset that's to be developed outside of Africa. So we're in a really good place at the moment. And I'll run you through some more of the details on the project and the DFS. But firstly, I'll just jump into sulphate of potash and just a quick 101. I think most people are slowly getting up the knowledge curve now on what's a pretty new commodity for Australian investors. But really, the fertiliser market is made up of 3 macronutrient fertiliser types, being nitrogen, phosphate and potash. The potash segment of the fertiliser market is about a 70 million tonne market per year, and the majority of that production comes out of North America, Russia and Belarus. So MOP is used on carbohydrate crops, sort of broadacre farming. There's a smaller segment of the overall potash market called SOP. It's chloride free, so it trades at a much higher premium. And it's used on fruits and vegetables in the more premium sort of produce end of the agricultural market. So importantly, fruits and vegetables, you know, as an agricultural segment, is growing a lot quicker than the staple crops, as you can appreciate, for a variety of factors. So it's a great, I guess, a great market to be leveraged to. We also sell at a price that's almost twice the price of MOP, and that's because SOP is just pretty geologically rare around the world. Looking at the application rates for SOP globally, and you can see here it's in this map, it's really clear that you have the haves and have-nots in this in the world. You've got USA, Europe, and China that all produce domestic supply of SOP that they use, and you can see that their application rates range from 40 to 70 kilograms per hectare. And then you've got a range of countries or regions that don't have any SOP production internally, and as a result, they use very, very little SOP. So this is the big market opportunity for Australia as a whole, and definitely for Agrimin being the largest producer coming online, is creating that new seaborne supply for those regions on our doorstep to allow them to increase their crop yields to where they need to be to have food security. The product quality that Agrimin will produce will be second to none in the market. It's going to be very high grade. We're targeting a typical spec of around 52% K2O. This is very, very high grade. It'll be water soluble, and importantly, just recently we announced that we had our first organic certification for our products. So that does differentiate us from a large part of the SOP market, which is actually produced by a chemical process. So as you can imagine, consumers are becoming a lot more focused on food quality and not buying fruits and vegetables that use a lot of pesticides or a lot of chemical fertilizers. Having an organic product is really going to be quite important over the, I guess, the 40-year mine life that we're going to be selling SOP. The development of our project will be pretty conventional for a bulk commodity project. We'll have our mine. In our case, it'll be extracting water out of the salt lake and pumping that water into solar evaporation ponds. We'll have a processing plant up near the mine site. We'll have a logistics train that's a combination of private and public roads, and then we'll have our own export facility up at Wyndham. So the whole, I guess the whole process from the mine, the resource, onto the ship is all owned and controlled by Agrimin, just like you'd see with any other major large bulk commodity project globally. It's a very important point of difference as well. It's taken us a long time, as you could appreciate, to put together the logistics train that we have. The reserve for Lake Mackay clearly is in a class of its own. We converted 20 million tonnes of our resource into reserve. That 20 million tonnes supports a 450,000 tonne production rate for 40 years. So it's already a very big reserve base, but it's only scratching the surface of our overall resources, and there's a lot of upside and a lot of potential for our project to grow and expand over time to meet growing seaborne demand for SOP. The whole backbone of our company and everything that we've been doing for the last 6 years is really based on having very strong fieldwork programs and data collection to underpin all of the models and all of the engineering that's gone into our feasibility studies. So we've completed over a 1.5 year pilot evaporation trial on Lake Mackay, over 2 years of pump testing across 22 trench sites across the lake. So the database that we've collected, is second to none globally for any project that's gone through feasibility work in the brine industry. Also, at the end of the DFS, we did involve a few of the contractors through the DFS. That process went really well. We ended up with about 70% of the capex being backed by EPC proposals from those contractors. So that's, that was quite good. It allowed us to take the DFS quite a long way, sort of into, I guess, the design and getting to a point where we could get those EPC contracts on our desk. And it's meant that, at the moment, we're not in a really heavy cash burn period through the feed work, because a lot of it's been done. Looking at the DFS highlights, and I mentioned earlier, these are outstanding results. We're really, really pleased. $159 per tonne FOB cash cost, it firmly puts us at the very bottom end of the global cost curve for SOP. And that's the most important thing when you're looking at multi-decade large assets. It's just being at the right place on the cost curve and getting through all the business cycles. So we're very pleased that we managed to get the costs down to where we knew it could be. You can see post-tax IRR of over 20% is exceptional for a long life project. The NPV is 1.5 times our capex number. So overall, just a really, really strong and economically robust project. And as I mentioned earlier, all the technical work we've done also has shown the project is very technically robust. On top of that, the ESG credentials of the project are just second to none. The level of Indigenous engagement that we've had, we pride ourselves on that. It's been a big part of Agrimin, but that's important and becoming more and more, I guess you could say, in the view of many investors and companies to sort of engage more heavily on that front. We'll have the lowest carbon footprint of any macronutrient fertiliser, which is great, and obviously climate change and those things are a big issue these days. And all of this is sort of, I guess, to some degree recognised by the Australian government when we were recently awarded major project status, and that was really about the jobs that we'll be creating up north, the local jobs, the Indigenous jobs, the economic development, infrastructure, and also a big amount of exports. Looking at SOP prices, and the price that we used through the DFS was $500 per tonne. You can see it sort of sits pretty firmly in amongst where prices have been for the past decade. And you can see SOP prices are pretty consistent and stable. So it's a good commodity to be in. You don't wake up every morning going from hero to zero and back to hero, but it's consistent, and we can get on with the job. Looking at I guess the key drivers behind the SOP price, as I mentioned earlier, increasing consumption of fruits and vegetables is going to be great for SOP because SOP is an essential fertiliser for those crops. Increasing agricultural intensity, so things like glasshouses, fertigation, all of those types of food production practices require more specialised fertiliser, and SOP fits that. And then also we're seeing half of the SOP production comes from the Mannheim process, which is pretty dirty and heavily polluting process, and we're getting seeing more pressure on that supply base. And here's the cost curve. You can see we're firmly at the bottom. I won't go into too much detail here, but the red parts of this cost curve is the Mannheim production. And that is effectively the conversion of MOP to SOP, and shows you that the SOP market is undersupplied currently already. So there's a massive market opportunity. Will be I guess the low cash cost is supported by a variety of factors that I've listed there. I won't go through them in this presentation. Importantly, 50% of our overall operating cost is actually linked to transport. So we, through the DFS, spent a lot of time making sure that we had a very efficient and a dedicated logistics chain. And you can see here on this map, we'll be taking our product up through the Wyndham port. It was basically a direct link from our storage shed at Lake Mackay to what will be our storage shed up at Wyndham. We'll put in our own ship loading facility up there, and so we'll have a very, very efficient logistics chain with minimal rehandling, and we believe that we should have a very, very competitive transport cost. Looking at the sizes of various projects around the world that are in development phase, you can see the only two projects larger than the Mackay Potash project are the two up in, or the project in Eritrea and Ethiopia. So this project really is globally significant. It's a very important project for the SOP sector and more for in general for the potash sector more broadly. Getting into sort of funding and where we're going, I guess over the next 6 months, we'll be trying to close out the funding. We engaged quite heavily with NAIF for many years now. We have strong support from them. Obviously, given the amount of infrastructure that we're building in Northern Australia, this project's pretty well suited to what they were originally set up to do. So we'll be targeting around a 65% gearing, with a large part of that cornerstoned by the government-backed debt. We're talking to other variety of debt providers and commercial banks to fill that debt gap. And then in terms of the balance there, we're really focused on talking to a number of strategic partners, and that process is still going. We're open to the whole variety of options to close that funding gap at the moment, and we haven't made any decisions on any of those fronts, but we will be getting proposals and offers on our desk throughout the first quarter next year, and we can start to make some decisions on how we cut up the balance of that funding. But overall, there's been really strong interest in the project and seeing the project developed. The economics and cash flow margin are second to none. So, we're very confident that there'll be a funding solution in place. The indicative timeline is here. So we've got next year is a big year really to wrap up the funding and offtake. So it should be quite an exciting time to be a shareholder. It should have a lot of news flow. At $120 million market cap, we really are very undervalued, both from a relative perspective and also on an absolute basis. So I believe that the news flow coming out in regards to offtake and funding, hopefully we'll start to see that market value of a company increase. And we should have a fair bit of news flow on that front. The feed work is continuing in the background. As I said earlier, it's not in a really big cash burn phase at the moment. There's areas of critical path items that we're chipping away at, but we're not spending a whole heap of money right now. And then we need to finalise the regulatory approvals as well throughout the course of next year. So by the end of next year, the project will be fully funded and in a position to reach our FID. So yeah, that's Agrimin in a snapshot. So we're set to be the world's lowest cost producer of SOP for 40 years. It's a hugely important commodity in the agricultural sector, and the product that we'll produce will be extremely high specifications, high grade, water soluble and organic. We have a huge reserve that supports what we're doing currently, and that's going to only grow as we spend more money and time on the project. And I think, at the moment, from an investment perspective, it's a great time to be a shareholder. We're about to come into a really exciting phase through funding and offtake with a heap of news flow on that front. So I'd encourage you to have a better look at the company. Please let us know if you've got any questions. We put a project video out a couple of months ago. So if you want to know a bit more about how the project actually works, I'd encourage you to go and click on, have a look at that. So yeah, thanks. I'll pass back over to Amy.
Thank you so much, Mark.